John Higgins, Mortgage One. Happy Monday. So, short week this week, of course. We're coming off, some pretty decent economic news with regard to inflation. Although the Fed continues to kind of beat the drums that they're not done with future rate hikes, we haven't seen one since July now. So the Fed certainly has been on pause. The numbers looking much better. Employment, those numbers continue to remain relatively strong, which is great. Again, we need people with jobs to buy homes. But the Fed continues to wait, I think, to see that the employment numbers break down a little bit. But all the inflation numbers that we've been getting here over the last number of readings have been very positive. So we've come off a high of 5% on the 10-year Treasury. We're back down to around 4.5%. That's great. Looking at the 30-year fixed mortgage, we broke right up to 8%. And now we're back, heading towards 7.5%, maybe a little bit below that right now. So all good news on that front. So we'll see what happens next week. Very short week this week, so there's not much economic news out. A couple bond offerings that the market will have to digest, which has been difficult of late. But all in all, the trend that we are in, where we seem to be hitting higher highs and higher lows, now all of a sudden we've broken out of that trend, and we've seen that 10-year Treasury break outside of a little channel that they had that seemed to be predicting higher and higher rates, and now maybe we get a little bit of a respite on these higher rates and can kind of consolidate and maybe even see interest rates come down a bit more as we head into the new year. So wanted to wish everybody a very happy Thanksgiving. It is one of the better holidays out there. Time to spend a little time with your family and be thankful for all that we have. So we'll catch you next week with an update. And again, happy Thanksgiving.